Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P500 for Thursday, August 15th, 2013. Well, a continuation of the trend to the downside today in a candle that's made a lower high and a lower low. A fairly dramatic trading day. A very large black body candle denoting the sellers making a substantial amount of net bearish progress on the day between the open and the close. And they've continued some of that downside momentum in net terms that began with the previous day's trading with that relatively large black body. The sellers have closed with very strong control of this market by closing the market down towards the low. And there was a small amount of price rejection, as we could see by this small shadow, but not terribly significant. So a very bearish trading day with the sellers in control for most of the trading day. By opening the way that the market did, it actually created a gap at the open and therefore creating a window in terms of candlestick charts, and that's this highlighted area here in the bright yellow colour, and that will be a potentially strong area of resistance if this market does rally. So if we are going to see the buyers coming back into this market, there's another barrier for them to the upside, and it's quite a large window as well, and quite significant. Now, if you recall, I suggested that the area around the 1687 level was very important, and prior to the previous day's trading we had the market testing to or below there for 4 or 5 consecutive trading days. For the previous day's trading we saw the market close below there on a bearish candle and did set the market up for what happened today. That did suggest that there was a change in sentiment in the market, back to the downside, back to the sellers, and today this large gap down has seen them maintain momentum and even expand the momentum that they built on that previous trading day. I did expect that we may find some solid support at the top of the highlighted yellow zone around 1675. In the recent past we saw buying coming in around that area, but no such thing has happened. The market has just totally blown that away in a very bearish candle, and suggests that the sellers are now very strong in this market. The area to watch for moving forward is this intermediate swing high around 1654. It will be an important area, and I suggest that we will see some buying coming in there. But we also have that yellow zone extending just down to 1650 and then also down to 1639, so very solid support down below where this market is trading. But the market could test anywhere down within this zone if it does break through this 1654 area in a bearish manner. Now, you may recall that I was discussing the complex head and shoulders pattern that had developed in the market, and with a slight adjustment to it with this rally that we saw here, we had another complex area for the right shoulder developed, and we had the left shoulder with 2 peaks, the head, and then the right shoulder with 2 more peaks. So we adjusted that neckline slightly down. We were looking for a bearish close down below that pattern to confirm completion of the pattern, and that's what we've seen today, the solid close down below. We couldn't preempt the market. We did have the breakout to the downside. If you were quick, you might have jumped on board when you saw a strong early bearish activity down below the neckline, but really for anyone that's trading in a longer term time frame, you really would have missed this move with the market trading down almost to the target in one trading day. The target is just down below where the market's trading, about 1651, and interestingly that target coincides with this swing high that I suggested could be strong support. So that falls into line with that area being an area that we should be watching for tomorrow's trading. In terms of the Fibonacci expansion, and here we've seen the market today trade through the 61.8%, the 78.6%, through the 100% areas in a bearish manner, testing down to and just beyond the 161.8% and being rejected from there. It does suggest a little hint that the market may not go on with this move. We may not see any follow through with the market losing some commitment, but the amount of commitment that was lost was really not terribly significant. A very bearish day, and a small shadow like that doesn't really mean a lot, but combined with the interaction with the Fibonacci ratio, it suggests there possibly could be a lack of follow through, but not terribly significant. If we do see this market trade down through this level and down through that intermediate swing high around the 1655 area, we have a target at 1635 for the 261.8% level. That's a fair way below where the market's trading at the moment. And in terms of the Fibonacci retracement, we're now in an expansive mode of that. The market had tested to the 100% level in a bearish manner. It did suggest a possibility of the market going on with the move. It has traded through the 161.8% bearishly, testing to the 261.8%. Rejected from there. There is a hint that we may not see follow through, but we want to see evidence of that. So the low here becomes very important for tomorrow's trading. If we do see the market trade down through the swing high 1655 roughly, there is a possibility of the market testing to the 1635 level. That's the 423.6% level. In terms of Ichimoku, quite a change of sentiment in this market with today's trading, and it has been quite some time since we've seen the market trading below the Kijun-sen. And the last time that we were trading below there was back in early July, late June, and now today a bearish crossover down below the Tenkan-sen and the Kijun-sen, the green line and the pink line, suggesting that we have a bearish market in the fast and medium term time frames, and really does suggest that this market may be destined for lower levels. The only thing here is that because it occurred above the cloud, we have give it a lesser probability of seeing any substantial follow through. It's a weaker signal. Would be much stronger if that occurred down below the cloud, but the reason why that is a weaker signal is because obviously if it occurs above the cloud, the market will eventually interact with the top of the cloud, and it may hold as support, as opposed to if we see that type of crossover below the cloud, there isn't any support from the cloud down below, obviously. But with this market trading down through these areas, it does suggest that we may be destined for lower levels. The market is still bullish in the long-term time frame, so we could see the market bounce from one of these areas. With the way that these candles have developed, it may not be over the next day or so, but really crucial to this market here is the 1654, 1655 level, then extending down to around the 1637 level. But I think if the market does trade down through those levels, we should watch the cloud very carefully. The cloud will most likely act as a strong area of support for this market, and as we move into the next trading week, the cloud will be moving up towards where the market's trading at the moment, so that dynamic level of support will actually be moving higher and may save this market more grief. If we do trade down through this area, this zone, in the next couple of days with some very substantial moves down through there, the market may be interacting with a fairly not with a narrow part of the cloud, and the narrower the cloud, the less the resistance. So there's a possibility that if we see strong bearish activity down through there, we could see the market changing into a bearish market in the long-term time frame. But I don't think that'll happen. I think we'll see the market hold up at one of these levels before we reach the cloud, and if we do reach the cloud, it should act as solid support. But really, for tomorrow's trading with this solid bearish activity, 1655 roughly becomes very, very important to this market. And if we do rally, then the top of the highlighted yellow zone at 1675 may now hold a strong resistance, previous support, and then the area where the window was opened from about 1685 down to roughly about 1680 may act as very solid resistance as well.